Now let's get into some of your big market moving news today. Some speculation on a Europe trade deal that could be coming and some bad headlines from China. Overnight last night, the China Ministry of Commerce comments on the US chips ban. They say that the US is abusing export controls. And China says US attempted ban on Chinese chips is discriminatory. They say that the US actions harm rights and the interest of Chinese companies. And China is urging the US to correct its improper actions immediately. China vows to safeguard their rights and interests. China also says that US measures on China chips impact global supply chain. China says that US measures are typical unilateral bullying and that the US actions seriously damage rights of Chinese companies. China's vice foreign minister meets the new US ambassador to China. So again, these headlines we're getting from China overnight and this morning just didn't sound great at all. Now, China says they aim to collaborate with the United States in enhancing steady relations, according to the Ministry of Foreign Affairs. NVIDIA predicts a $50 billion China AI market in 2026, according to Jensen Huang. He does say that AI chip export controls are a failure. The German defense minister says it remains to be seen whether the U.S. will join next package of Russia's sanctions, with talks ongoing. China's MOFCOM says reciprocal tariffs brings uncertainty to the world economy. And Japan's Prime Minister Ishiba says selling Japan cars made in the US is one way to cut the surplus. Stanley today upgrades US industrial sector to overweight, and they have downgraded the US utility sector to equal weight from overweight. Target also had earnings this morning, did not come in good at all. Adjusted EPS $1.30. The estimate was $1.66. Net sales at $23.85 billion. Gross margin at 28.2%. Comp sales came in at negative 3.8%. Comparable sales. The estimate was negative 1.94%. So that was almost twice as bad as expected. EBITDA came in at $2.29 billion. The estimate was $1.84 billion. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. Came in better than expected, so that's a positive. They see full year adjusted EPS $7 to $9. Previously, they saw $8.80 to $9.80. So they lowered the high end range. They lowered the low end range. Overall, not great. But Target only down about 4% today, just reflects a lot of that bad news has long been priced into the stock at this point. U.S. House Speaker Johnson says we came to a $40,000 SALT deduction cap agreement. This was one of the holdups in getting this funding bill actually onto the floor of the House. China says U.S. trade talks are an important step to bridge gaps, but multilateralism is needed to find a way out from the global trade turmoil, China's statement to the World Trade Organization said today. U.S. House Speaker Johnson says we are planning a floor vote on the tax bill today. Again, I think it's something that Wall Street will start to pay more attention to is deregulation, lower taxes, what the landscape could look like for corporate America. Again, tariffs have kind of blinded us from that. We really haven't paid attention to any of that like we were in January and February of this year. I think that could be some of the next leg of excitement for this market, especially when we start to get more CPI numbers that come in and show we don't have an inflation problem like it was thought we were going to. That's where things get really crazy. And the Fed can start to lower rates and so on and so forth. White House senior advisor Hassett says if we get to 3% growth, Trump's tax bill pays for itself. And then he says we're going to get more than 3% growth. So if that's true, without an inflation problem, you would definitely want to be long this market. Germany's Chancellor Merz on tariffs says there are signs that the US could be interested in a deal with the EU. And Germany's Chancellor says when he visits the US, he will try to persuade Trump that we should have no tariffs on either side. And the EU is preparing a trade proposal for the US to steer momentum in talks. It says the European Union was expected to share a revised trade proposal with the United States, hoping to boost momentum in talks with Trump's administration amid lingering doubts about a transatlantic deal. According to sources familiar with the matter, the new paper includes proposals that consider U.S. interests such as international labor rights, environmental standards, economic security, and gradually reducing tariffs to zero on both sides for non-sensitive agricultural and industrial goods. The paper, which was intended to be sent to officials in Washington earlier this week, also outlines mutual investments and strategic procurement in energy, artificial intelligence, and digital connectivity, according to people who spoke on the condition of anonymity to discuss private deliberations. So long story short, it looks like there may be some progress at least starting to take place with an EU trade deal. The U.S. House Speaker Johnson and the Freedom Caucus are meeting at 3 p.m. today to try to get this tax bill on the floor. And Oman's foreign minister says a fifth round of Iran-U.S. nuclear talks will take place in Rome on May 23rd. Trump also said today we're doing big deals with India and Pakistan. Here on the day today, the percent of stocks trading above their 50-day moving average coming in at 67.5%, down about 3.5% today. So again, a little bit of consolidation, little sideways action here is healthy, right? We were already on the high side of, rallies. You can get into like the 80% range, 85% range is where we were in December of 2023. So there could be like another 15% or more to go to the upside in an optimistic scenario, but getting a little bit of a reset here, definitely not a terrible thing, especially when the breadth has been so aligned in this market. Like breadth has been so strong. It's been a great sign, but everything has been going up together. Eventually that will need to break in order for the headline markets to move higher. But we'll see kind of when that happens. Doesn't look like it's happened yet. Seems to be some pretty good breadth still out there. But I do believe higher beta, higher momentum, higher growth is probably going to be the area to excel higher from here. Again, over the next 6 months, as we do get lower inflation numbers, cuts from the Fed, deregulation, lower taxes, and hopefully 10-year treasury yields start to behave a bit. That's something we also need to talk about here in this video, because as I've said before, above 4.5% on the 10-year treasury, it seems to be a sell signal from algorithms, right? Once you get above 4.5%, it seems like algorithms want to sell stocks, right, in different areas. Nasdaq's green today. Russell down 1%. Nasdaq's up around 0.5%. S&P's down 0.1%. Dow is down almost 1%. I think that has a lot to do with 10-year treasury yields just getting blown out at this point. And inevitably, you would hope you would start to see some relief there and yields actually start to come down. That would fuel a larger rally in markets. So I think it's kind of just a wait and see kind of thing. But if there is a risk to markets at this point, it is a bond market blowout, something the Fed would have to respond to, something that would maybe, force Trump to get even more relaxed on the whole trade war situation. It could be a positive outcome, but between now and then, there could be a little bit of volatility due to the bond market. Now, CNN's Fear and Greed Index today coming in at 69. It's been kind of in the 69 to 70 range for the last couple of days. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put in call options, greed. Market volatility is neutral, and safe haven demand in extreme greed, as well as junk bond demand also in extreme greed. And coming tomorrow, we will get a new AI investor sentiment survey Thursday morning. Last Thursday, you came in at almost 36% bull, 19.7% neutral, and 44.4% bear. Okay, so people are still very bearish on this market, and that's one reason why I'm bullish, is because I think there's a lot of people that are on the wrong side of this, that are bearish when they should probably be bullish at this point. And there's a lot more, bullish positioning that people need to do. With that said, there is some data coming out tomorrow morning as well. Chicago Fed National Activity Index expected to be roughly in line with where it was last month. Initial jobless claims expected to rise a little bit to about 230,000. Last week was 229,000. A big move higher would obviously not be good. If this number comes in low, that is positive. We will get S&P Global Composite PMI, manufacturing PMI, and services PMIs that will come out at 9:45 in the morning tomorrow. And then existing home sales come out at 10 p.m. Kansas Fed Composite Index and Manufacturing Index come out at 11 o'clock in the morning. Fed Williams speaks at 2 p.m. That is all for the catalyst tomorrow. And really, that's like all of the data we've gotten this week. It's all going to come out tomorrow morning. So if there is going to be a larger move, it could be tomorrow morning. And again, I think the broader markets are really just consolidating here as well. That's what it looks like to me, taking a little bit of a breather from this rally and inevitably going to move higher. It's actually phenomenal how well markets have held up in spite of 10-year Treasury yields that just continue to go higher, especially above 4.5%, and the S&P is not destroyed. I think that's good. If we can start to get those yields to come down, well, that's going to be a positive, driver for this market. So we'll see. Let me know what you think down below in the comment section. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.